mean the overall efficiency of the power plant?
What is your conversion efficiency of your raw material into energy?
The overall efficiency of the power plant is 32%, right? And
no, I'm talking about coal has a certain conversion efficiency. Other fuels have certain conversion efficiency. So many tons give you so. What is the reason why I'm asking is, have you done any experiments where you mix in something with that to improve your electricity yield?
Yes. We are doing this business model based only on the biomass. Now, the biomass has about 4,000 kilojoules per ton. This is pretty standard in the industry. It's about 75% of the average of coal. So now the cost of that is only 25%, which is what gives us our advantage. Not only that, we have done some testing, although it's very preliminary at this point, of mixing different waste in order to get different caloric values, but there's a lot of factors to consider. For example, ash content. If you mix another product, another waste that gives you a really high caloric value, that can actually be a detrimental in the end if the ash content is too high, and you end up having to do a lot more maintenance on your thing. So biomass presents for us a good opportunity to use, but we can definitely further develop this if we want to use other waste. Okay, should I continue? So as I was mentioning, this gives us our competitive advantage. We have a machine that is very fast and very efficient. Now, I would like to pass the mic on to my technology officer to explain how we're actually going to make energy out of this biomass.
Thank you, Christian. My name is Lorax. I'm an engineer. I have previous experience in designing a biomass power plant. I'd like to show you how our operation is going to carry out using a biomass power plant to generate energy. Now, the biomass will be loaded into the combustion chamber furnace, which produce heat. The heat will be used to boil the water in the boiler. The steam produced.
Sorry, a little louder, please.
Yeah, what I'm saying is that the biomass will be loaded into the...
Excuse me, may I interrupt a bit? Yeah. I understand you're trying to explain the whole process, yeah. But can we hear the very short, complete business model? Okay, starting from palm oil, stem, making biomass, making electric, how do you sell, so that we can see the whole picture of your the whole business model, okay, before you go into the detail on how you produce electricity and how you shred the, okay, sure. I'm sorry to interrupt.
Absolutely. So we source trees, 25-year-old waste trees from the local oil palm plantations. We pulverize them. We burn them in a plant that's very similar to a coal-fired power plant, and we sell the electricity that we produce to the Malaysian government through a program that they have set up specifically for small renewable energy providers.
Is it being subsidized by the Malaysian government?
The feed-in rates that we receive are enhanced to incentivize small producers like ourselves, yes.
Okay. So when you look at the capital structures that you put on the top here, you are the sponsors, correct?
Yeah, that would be correct.
You be the sponsors.
Yes.
And investors take 70%. That's part of the offering.
Yes.
Who is running the whole thing?
We will be.
You'll be running the whole thing.
Yeah.
It's just strange because as sponsors, you're offering us 70%. Isn't that a little bit too much to give the investors from the first round?
Well, basically, we have to make sure that we correctly incentivize people to do it. Not only that, but POG is also going to be one of our key sponsors. So with regards to 30% and 70%, I believe that if we were to go in any other direction, then the scales would tip it the other way. As in, there wouldn't be enough to be able to generate the impressive IRRs. Now, if the IRRs were to go down, then obviously we can take more. So we are now targeting a IRR of 62% by year 5. If we were to go 40, 60, that number would go down to 50-something%. So it all comes down to a negotiation between the eventual investors and then us. But this will be the baseline starting scenario that we are going to present, after which discussions will start after that.
Now, if I'm the investor taking 70% and this thing doesn't go around, I end up running the whole place as a majority shareholder.
That is your prerogative because you do have voting power. Yes.
But then the risk is high. We're just looking from the very first question the gentleman was asking was, even Kun Gopkan was asking, was the logistics of the raw material. You talk about your shredding technology, which is good, you can do it faster, but the raw material distribution to your power plant, is it enough within the area? Because that's cost.
Oh yes, we definitely.
At Palm Organics, which is where we are proposing to set up this plant near, we are currently taking trees in at 15 ringgit per tree. So we feel that the surrounding area within 100 kilometers has enough trees for the next 16 years for us to be able to do that. The plantations clear on average 5% of their total state per year. That goes into the 25-year cycle.
That's 245,000 trees you need a year. You need 245,000 trees a year.
That's
based on
correct,
those
yes.
numbers, exactly. And that would be what percentage of the trees within 50 kilometers?
That would be. I think that would be about 30%.
Yeah, 20 to 30%.
20, 30%, that sounds about right.
Yeah.
Yeah.
And also, I thought that you'd have to pay for the fleet of trucks yourself, 43 fleets, but you mentioned before that the customer delivers the trunk.
Yes.
And they're paid $5 or 15 ringgits each. Does that even cover the fuel cost? Because I think one truck would only take one tree because of the weight of the tree.
Actually, we did the math, and average, if we assume the average weight of a tree trunk to be 750 kilograms, each truck can take up to about 18.
A small truck can take 18. A big truck can take up to almost 40 trees.
Okay.
Yeah.
And this is the current operations of Palm Organics that they're currently doing right now. This is their numbers for their business right now. So it is actual spot market prices, current events that's happening. Well, okay. So
Have you made any arrangement or study in terms of how to get the raw materials?
I'm afraid I don't understand your question.
Is there any sort of pre-study or real arrangement, or only you study from the number on how to get the raw material into your plant?
We were
Yeah, Palm Organics has had contracts before with Felda up in Ipoh, which is in the northern part. We have also had Wilmar over to our factories, which is a big oil producer, and we have also had Felda over to our factories. So we have the inroads to do that, but since the Lorax team has not been on site, we have not actually started the process of talking to these people, but we plan on engaging them in long-term contracts in order to secure our feedstock.
leveraging off the relationships POG currently has with them, which is going to be our bedrock, which is why they're such an important investor for us, sponsor for us.
Any particular local government officials or any local godfather or godmother in that area that you know, or you know, that will not make this project possible because they won't allow the farmers or the plantation to send the raw material to you?
We do not know any individual godfather figure, but we do intend to approach the big plantation owners who do have a concentration of supplier power with this idea. Because if we can get them on board with this, then they will be incentivized to not squeeze us or disrupt our supply. Not only that, but the big boys would also have political connections. That's one. Two, alluding to political connections, needing to push this through means that we're taking something away from someone else, hence the need for power. Right now, we're clearing waste. The tree trunks are rotting there, making pests. We're not taking something away from someone else. Once the Malaysian or the entire palm oil industry has moved over to figuring out what they want to do with the trunks, because as Christian mentioned, they're right now at the fruit stage and then they go to the leaves, then we will be already in a position to take advantage of the current existing relationship with the big boys, which we have been doing business with for 16 years already. And it takes a long time to build trusted relationships. Hence, a very long duration is needed for us to build this kind of relationship. So no singular godfather, but we're hoping a company becomes our godfather. Well, okay. So I will carry on at this point. Thank you. So the debt will be 60%, as you can see. Equity 40%. We've gone through this already. We believe that this is going to be a low, the risk is going to be low through diversification for the equity investors, simply because we're going to be accessing the capital markets through the debt section. It will form a solid cash cow, leading to leverage returns of 62% by year 5. Now, we have identified the risks. We've already touched upon this, the godfather. So another political risk could be the government simply reneging on the contract because of a regime change. They don't honor contracts between A and B. Usually, this would be a major concern for us. However, we don't think that this is going to be a major concern for Malaysia, in particular for this business, simply because there has already been a precedent renewable energy program that has survived regime changes. I'm specifically talking about the small renewable energy program that was started under Mahathir's rule in 2001. It has survived 2 prime ministers and was only finished at 2011 under Najib. That was the predecessor to SEDA's current FIT program. So Malaysia has been committed to a renewable energy program throughout regime changes, and we believe this will go through in the future as well. Second thing is supplier power. Again, big boys, they will want to squeeze us, and this is very important because it affects our margin directly. We are going to be applying for a program that has fixed revenues. Fixed price, fixed revenues for a set number of years, so the big factor will be costs. If we get squeezed on the margins, then the returns will be lower as the years go by. The only way to get around this, we feel there are 2 ways, is to engage the big plantation guys so they have no incentive to squeeze us. Second will be to engage or expand into the clearing business ourselves, but right now we have to do more research into that avenue and make the qualitative assessment whether we want to expand our core competency from creating energy into clearing tree trunks. So to summarize, why is Lorax Energy such a fantastic opportunity for us? So these are the investment highlights, the 3 R's. Revenue, our revenues are solid. Solid by, I mean that the government is our customer. They have no history of reneging on renewable energy contracts, and it is a 16-year enforceable contract. We have to sign a power purchase agreement with them. Here's the additional benefit. Not a single investor has to put any money down before the power purchase agreement is signed. So there's no money on the table, no risk whatsoever. All we need is the promise or the letter indicating of promise in order to move forward with the program. Once we apply for the program and the power purchase agreement is signed, then we start breaking ground and the money starts flowing. Our revenues are also low risk and steady, because why we're getting into the feed-in tariff program of Malaysia, subsidized rate, 31 ringgit cents per kilowatt hour. It is fixed. We're going to generate 10 megawatts. We're not going to upgrade the power plant willy-nilly. So it's going to be generating 8 million USD per year. Our resources are our trees, which are right now a waste, so they're going to be cheap. We get in now. We're going to be able to lock in a contract that is long-term, keeping those prices down. Second, we only need 1%, as we've calculated already, less than 1%. So we don't think that we're going to be such a market force that we're going to move the prices. And finally, we don't believe there's going to be price volatility because we're going to lock in the contracts anyway. Also, if we engage the big boys, they have no reason to affect us in terms of the cost of raw materials. Finally, our returns. Who will want to invest in a return that is 60+% by year 5? At this point, thank you. And I'd like to open the floor to further questions.
May I address your technical person a little? It seems